pulse wave positive momentum, pulse wave negative momentum. So we're going to talk about these four columns first. Let's discuss these four columns, okay? When you look at your report, which is downloadable from the blog, and you can actually, I think it's either in a JPEG format or I forget the name of the actual format, but you can download it and view it like a picture, and you can blow it up and make it smaller, rotate it, do whatever you want to do with it, and it's easier to view that way. Okay. Basically, what you're looking for is this. Let's take the very first security on here, AMR. Okay, AMR. Pulse wave resistance is at 649. Pulse wave support is at 586. Okay. You have a 1 in the pulse wave momentum, positive momentum column, and a 1 in the pulse wave negative momentum column. What you're looking for is a 1 in either one of these columns. Okay. When it is a potential pulse wave setup, that is the highest probability trades, you'll have a 1 in both columns. In the positive and negative momentum column, you will have a 1. That means this security is now primed to break out. It's either going to break out above the pulse wave resistance or break out below the pulse wave support. So you would promptly place a buy stop limit order to buy at 649, and you would place a separate ticket to sell short at 586. Whichever one is filled first, you use the other one as your stop loss, okay, to trail your position. Simple as that. The other type of setup that you will see on here regarding the pulse waves is this scenario here. Take CAL, for example. This is an ETF that primarily trades in the livestock futures contract. So if you don't want to trade futures directly in a futures account, you can trade the CAL ETF, COW, okay? So coming into Thursday's trading for CAL, we have a 1 in the positive momentum column, all right? But we do not have anything in the negative momentum column. What that means is this market is primed for a pulse wave, okay? And it's favoring the resistance side of things. Now, you could still do both. Place the long and the short trade, okay, which is recommended. However, it's saying that the odds and the way this market is moving, the odds favor the resistance side to be violated. In other words, the odds are favoring that the $30.74 is going to be triggered before this one, the $29.88. Okay? That's all that means. So you also have a situation like on here, the Australian dollar Forex, okay? Here you have a negative pulse wave momentum reading, okay? And under the positive pulse wave momentum reading column, you have a 0. Again, likewise, you could place both tickets, the long and the short, and it's saying that the breakout is favoring the downside, that the $90.92 will probably be violated before the $91.81 is. It's not saying that's necessarily the case. It's just saying that that's based on the probabilities based on the way the market's moving. All right. So again, you can still place both tickets. This just helps you out in case you want to just go ahead and trade the short side of that. Then you can go ahead and do so. That's all that means. Okay. So again, in review, your pulse waves are your primary signals. Okay. You either have a 1 in both columns, which is the strongest signal. You're going to place both the long and the short, or you have a scenario where it's telling you that a pulse wave is set up, but the probability is either to the long side here, or the probability is to the short side here. Okay, that's all that means. All right, moving on. The next, or secondary signal, I should say, is your resistance high and support low. These are your secondary tradable signals, okay? When there is no pulse wave signal, that is the next thing you're going to look for, okay? As you scroll down the page, that's where you'll find those trigger points, okay? So we start here. Looking at Apple for Thursday. We do not have a pulse wave setup, which means that the market is either trading above its prior pulse wave or below its prior pulse wave, okay? So you come over here to this column and you see resistance high, resistance support. All right, let's talk about this secondary signal. The secondary signal is also very powerful because when there's not a pulse wave setup, that means you're either long or short that market, or if you're out of that market, you're waiting for the next pulse wave signal to develop. So that means you'll be on the sidelines. Well, the secondary signal gives you something to trade. When there is a secondary signal, it is also a high probability signal. It is a trending signal. It is the signal you look for to add to positions that you may already be in that particular security. If you're flat that security and you like to be involved in that security, it gives you the opportunity to do so, all right, prior to the next pulse wave setup, all right? These also have the potential to be extraordinarily profitable also. But the catch with the secondary signal is this. It can be used intraday. 9 times out of 10, if you get triggered on this one, you'll want to, as soon as you see profit, take the money and run, or get out by the close. However, if the market moves substantially in your favor during the course of the trading day, you can decide to hold overnight. Just move your stop to break even or lock in a little bit of profit and go ahead and hold it. Okay? It does move with the trend, your secondary signal. Now, let's talk about the 4 columns that make up the secondary signal. It's your positive PPT, high frequency trading bot, and your negative PPT, high frequency trading bot. These two right here is the bread and butter of your secondary signal, okay? And this is a very powerful, these two indicators are very, very powerful. And it's going to take a little bit to explain this to you because it is deep. So let's just jump right in there. All right, let's talk about the positive PPT, high frequency trading bot. This, whenever you hear me refer to bot check, if I say gold had a positive bot check today, or gold had a negative bot check today, anytime you hear me say the word bot check, there's something wrong or something happening in that market. Okay? This indicator is a twofold indicator. Not only does it pick up high frequency trading activity, but it also seeks and finds trading anomalies within the bid and the ask, and the spreads and the order flow and the market depth for the prior trading day. If there's anything happening in the dark pools and things like that, it picks it up. I can't go into all the classified detail on how and what it does. Just understand that it does it, and it picks it up. And when that activity is going on, it snitches and tells you someone or something or some entity is operating in this market. All right, and they're manipulating prices or whatever. They're I don't want to use the word manipulating. Let's just say they're influencing the price activity. How about that? Price action is being influenced. Okay. Another thing the positive PPT does is it also looks for how can I say this? Continuity of price action in regards to trading in the direction of the overall prevailing trend or cycle of a security. So if a market is bullish, it's going to give you bullish trading signals to let you know when the next breakout is likely to happen. And it does have a very high accuracy rate of doing so. The positive PPT indicator also will light up in a bear market to let you know if there's some activity in there or some suspicious buying to prop up a security. And the reason why I named it PPT is because a lot of times in a bearish market scenario, the Presidential Working Group or Plunge Protection Team will come in and start to prop up the market, all right, through the Federal Reserve System. And they use their minions over at JP Morgan and Goldman Sachs and other entities to do that for them, okay? Sovereign wealth funds have been known to be involved in the process as well, historically speaking. I won't get into much more of that. It's not necessary. You just need to know that this indicator picks up price action. It's extremely sensitive. There is a rare situation about 2% of the time where if we get a positive bot check, right, meaning there's a 1 in this column here, that on the next trading day or not many trading days after, the market could actually reverse and go the opposite way. There are times where that happens because the price manipulation or price influence is so heavy in that market that it's doing something else. In other words, I could pick up a lot of buying activity in a trading session for a security, but it's not actually buying. It could be massive covering. So if you're short, the only way to cover is to buy, right? So it could be showing you massive liquidations of a short position so that the market moves higher, right? Or it could be some other form of manipulation and the market will actually move lower, which means that that order flow was suspicious or not real or canceled or what have you. We'd have nothing to do with that. My job is just to pick it up so that I can get an idea of who, not necessarily who's playing, but what's playing or what's causing price to be influenced for the next trading session. And it gives me a heads up so that if I was looking to buy the next day, I might want to consider shorting. You know what I mean? That's what the positive PPT indicator does. Likewise, a negative PPT indicator does the same thing. With the only difference is in an up market, it's sensitive to massive short things happening. It will pick it up in a down market too, but when you see a 1 in this category in a bull market or something, or a market that's bullish, look out. All right, you need to look out because it's telling you that something's going on in that security. So you're going to want to definitely look out. All right. When both of these have 1s in a column, something's going on in that security that's very suspicious. So be careful and keep your eyes open. Okay? How to use this? Okay. In Apple, we do not have a positive or negative pulse wave. No pulse wave setup whatsoever. So we move over here to our secondary indicator, positive and negative PPT. Okay. We have a 1 in both columns. So you say to yourself, which direction should I trade? Okay. Well, here's how I would use this. Always look for the trend, which takes us to this box here, trend. If there's a 1 here, it means the trend is bullish and or we're in a bull market. If it's a 0, like right here, it means the market is bearish or is in a bear market. Okay? So, you always want to trade with the trend. That is your highest degree of accuracy if you want to make money. So, being that the Apple stock is in a bull market or bullish trend, the first thing you want to do is trade with it. So, you have a positive PPT, so go ahead and place your buy stop order at the resistance high of 264.65. So, you buy at 264.65 on a stop limit. Okay? And use the initial support low of 258.83 as your initial stop. Now, that initial stop is tight. Most of the time, the stop losses will be tight because, again, you're looking at an intraday scenario. You're not necessarily looking to hold it overnight. Sometimes you get lucky and you can hold overnight, and that's cool. You go ahead and you do that. But in most cases, you're not. You're just trying to pick up, on average, 25 to 50 cents intraday. That's all you're looking to make on these resistance high and support low entry points. I'm just keeping it real with you. I'm keeping it honest. You're looking to make 25 to 50 cents. So your stop loss is always going to be wider than what you're looking to make, 9 times out of 10. And that's okay. Risk to reward ratios is a lie, and it doesn't work. All right? Just FYI for you.